What's up, everybody? Zach is back with another episode of Journey to a $1 Million. And the markets are super choppy right now. Monday and Tuesday were not very good days for my long-term hold portfolio. Commons, ETFs, different things like that. The options are definitely not as good as last week, but that's okay. We're coming out with some winners, coming out with some losers. And today I wanted to go over what the basic strategy is and my thought process on different things like position sizing, your risk tolerance, and just some good stuff like that. And before we get into those things, go ahead and smash that like button for the YouTube algorithm. Really going to help me out. And also, don't forget to join the Discord server, link in the description, Twitter, where we're doing all the live trading. Post the screenshots of when I'm actually executing a trade, and some other links like that. So go ahead and check all those out in the description. But anyways, yesterday, well, the S&P was down 0.73, NASDAQ almost 1%, and Dow is also down. Pretty much everything was down. And yesterday was 422, and if the 420 stocks don't do good on 420, and just the meme is Tesla is up. So actually, it's Elon Musk day. It wasn't actually 420 day. It was 420 is actually Elon Musk day. That's what the takeaway was from yesterday. But anyways, I went ahead and wrote out the different options that we were in this week since Monday. The last week you'll have to go back to the Thursday Friday's blog post to see what we were doing last week. It was super good, but everything was up last week, so obviously it's going to be like that. And this market, it's so choppy. It's more of a scalper's market. I mean, you're getting in and getting out. I had the Tesla as the only option that I did yesterday, although I contemplated doing that Boeing put, which it's paying right now. Should have done it. And also the Walmart one, which I'm actually adjusting to something a little bit further out in expiration date. But nevertheless, we did get the Tesla one. I saw it's Elon Musk day. Tesla was taken off, and I went in at around $10 and sold it at 12. Within time span of less than 10 minutes. I feel like it might have even been 5 minutes. I mean, it's and then after that I saw Tesla, this contract actually crashed back down to closer to 10. But hey, it was very wild for options. I mean, that's the thing is, for this Tesla one, the price of this contract went from 10 to 12 to 10, but Tesla was actually up 2%, and it stayed up. It didn't go back down, but the price of the contract actually fell back down. So the volume was weird. But sometimes it's just like that. So you just have to be careful. Have a game plan. Stick with your game plan. I mean, pretty much like that. But anyways, the SE, that one I did close yesterday. It was not doing very well, so I went ahead and cut that. Luckily, that was a small position, so that one didn't sting very much. The crowd and Apple, we were successful on Monday, and Google we were not. Although I think Google bounced a little bit. So if you held that one, it might have paid, and you still have a couple of more days. But see, that's the thing. What I wanted to get into next is the key here is position sizing. So for example, if you have let's just say you have a $2,000 portfolio, and you're looking at this Google call, and it's already cost $1,100, $1,200, $1,500. That might not be the best thing for you to do. Now, if you have a portfolio of $10,000 and you have a couple grand to put into the short-term options, if that's your thing, if you want to try it, which is not for everybody. This is some volatile stuff we're talking about. Even if the markets are flat, this is going to be very volatile. But if you have a couple of grand that you're willing to put into it, then it could be okay if your portfolio is like 10,000 or something like that, something bigger, because that's only 10% of your portfolio. Obviously, there's not a set in stone rule of how much you should put into a position or whatever for short-term options. A lot of people will say differently on it, but I would say definitely don't do more than 50%. At any time on anything. If you have only $2,000, don't put all your $2,000 into options at one time, because if the markets turn down, if SPY and Triple Q are falling, free falling, then everything is just going to get hammered. So we just have to keep that in mind. The position sizing is key. So for myself, I might do $1,100 on Google, So I lost $200-300 on it, which is not a big deal because you turn around on the Apple made a little bit, Crowd made a little bit. But see, that's the thing is the Apple was so cheap, it was only $1.50, so $150. So you can get 2, 3, 4 of them. It just depends on how you think about that. But also the Crowd is less than half of what Google, so you could get 1 or 2, something like that. But you would consider what the risks are, what your personal risk tolerance is, and also the Tesla one was very expensive. Of course, I had more conviction for Tesla than others, but I also have conviction for Google and Apple. But the only problem with that is we're coming into earnings season, so those are going to be more volatile, like the FANG stocks. Netflix, speaking of which, Netflix literally just uppercut right into the jaw. KO'd. Just a few hours ago, too. Just KO'd Netflix. But, yeah. Earnings wasn't very good for that. Actually, I want to read you a quote from, speaking of this Netflix, while we're talking about it. Quote is, "We've had this fantastic rally, and I think investors are just pausing right now to digest more fundamentals, more of the earning releases that are going to start coming over the next couple of weeks." And this was by Ryan Nallman, which is the market strategist for Informa Market Intelligence. Netflix just got killed. My portfolio got killed. I'm heavy on tech yesterday. Yeah, it was a bad day. It wasn't too bad though, but it was a bad day. Second bad day in a row. But Netflix, they're literally down 9% in after hours because of the earnings just hugely missed. Big time missed the earnings and just really got KO'd there. And I'm afraid that might happen for some other ones too. But of course, let's see Google, let's see Apple, let's see all the other FANG stocks. But yeah, and that's going to be huge for the NASDAQ and S&P. Different, and a lot of ETFs will have Netflix, I'm sure. So just have to be a little bit careful. But nevertheless, so just consider that about the position sizing. I mean, I wouldn't go so much anyways, and always have 50. If you're doing short-term options, if you set aside $3,000 to play around with short-term options, which is the most riskiest, it's the riskiest thing that I can think of. Beside using like 1,000 time leverage on Bitcoin or something like that. Beside that, this is the riskiest thing I can think of. So for sure, we should consider not putting so much money into these positions in the first place. It doesn't matter if we win, we lose. We're going to win some, we're going to lose some. So I wouldn't go too big into them. But obviously, I think most of you guys know that. So yeah, just consider the position sizing. I think it's important here. But yeah, I would keep at least 50%. If you have $3,000, I wouldn't put, at one time, I wouldn't go more than $1,500 into any short-term options. And I would always have this cash sitting on the sidelines because the markets might just free fall. You never know. But the goal here is to remain 70% accurate over the short to mid-term. If month on month we can be 70% accurate on short-term options, that's pretty much how it is. Don't get discouraged if you're in one position and you lose a couple $100. It's going to happen. And go into it with a plan. Say, I've got my $3,000. Now I've got more money in my long-term hold portfolio. I've got some ETFs. I've got some stocks. So I've got some triple Q. I'm holding some Apple and Facebook. Like, I'm cool with a 10, 20, 30, whatever you got. And then you have a few thousand. Hey, I want to get some extra income. I want to grow it a little bit faster at a faster rate. And it's fun. And I have some time to sit in front of my computer at opening bell every single day. So I want to try my luck at short-term options. Okay, fine. So take your money, make a plan, say, no matter what, I'm cutting. Any position gets to negative 40%, I'm going to cut it. So if you are in a $500 position, negative 40% is only going to be a loss of $200. And if you have your couple $1,000 set aside for this, $2,000-$3,000, a couple $100 loss is not going to kill you. Because on the other hand, you're going to have ones that hit and you're going to have ones that win up a couple $100. Have your plan to take profits as well. So if it's up 25%, sell a contract. If it's up 50%, sell a contract. If possible, for the cheap ones, get more than one contract so you can dollar cost average out of the position when it's going up. 25, 50, 100%, sell, and then you're making more money than if you just sold your only contract at 25%. Or all of your contracts at 25%, depending on how much you have. But again, if you're in a more expensive one like a Tesla or a Google that costs thousands of dollars, or Amazon or something like that, then you're not going to be able to afford 4 contracts. It's just too much money into one position. It's too much risk. Apples in different baskets, guys. But pretty much just keep that in mind. And that's pretty much all I wanted to say about that. I really want you guys to focus on that, because these days, like Monday and Tuesday, are the days that separate the experienced from the unexperienced traders. And maybe a lot of you guys are inexperienced, and that's the reason why you're watching my channel. So I would really try to focus on that. It does matter a lot about the position sizing, because you're going to lose, you're going to win, but you got to stick with it, and your goal is finish the month to 70% up. But, you know, hopefully it will fall in the 60 to 80% range. It's not going to be 100%, obviously. That would be a very hard thing to do. And if someone is claiming 100%, then that's probably not true. But hey, it's just how it is. But anyways, let's move on. Make sure I'm sharing the screen. Let's move on to the short-term options that I am thinking about. I'm considering. It's not set in stone. It's not the Bible. It's not true no matter what. I'm going to buy at these prices, because guess what? The markets are not open right now. So I cannot see what the actual prices are when they're going to open. Like, for example, Walmart could gap up $20, and this is not going to be selling for $1.40. It's going to be selling for $6, $7, $8. It's going to gap up a lot. So keep that in mind, guys. Don't come to me and be like, hey, it's not $1.40. Did you get it for $1.40? I can't get it for $1.40. It's at $2 now. Should I still buy it? Don't come to me like that, because I'm letting you know, fair warning, this is the prices that I'm just considering thinking about. When the market actually opens, follow me on Twitter. Link in the description, smash the like button, and on Twitter, then you'll see actually what I am entering for. But remember, guys, by the time I can make this screenshot with my little screen snipping tool, copy and paste it to Twitter, write out the like WMT 5/7 142C at. By the time I can write that out, tweet out, and then by the time you guys see it, it might be 2-3 minutes later. This could already be up 100%. Could also already be down 100%. So it's really, things change so fast. So keep that in mind. If you're serious about it, turn on the bell notifications and buckle up at opening bell at 9:30. But anyways, keep rambling. Here we are. It's the Walmart 5/7. This is what I adjusted. I just copy and pasted this text, but just a small note here that I'm adjusting it a little bit from yesterday. I'm dragging out the expiration date, 142 call at $1.40. It's actually really cheap, and it's going to give us 2 weeks, more than 2 weeks here, to see an increase of only, I mean, we're not talking very much. It's $1.35. I mean, I think this is doable. Of course, we need to break even on the contract fee, but hey, I think this is a good one. Walmart got hammered so hard during this last dip, but they're still doing all right. Their doors are still open, you know what I mean? And I think that it was unjust. And then the next one, in case, I got 2 puts on here and 2 calls. So in case the markets do keep dipping down tomorrow, which is very possible. Earning season is very volatile. Especially the big tech ones are coming up, like Fanes and stuff. But I got the SPY 423, so this is just a 3-day sell expiration. $411 put at $2. These small hedges can work wonders if the markets do start moving down. I mean, I'm almost wanting to just get this ready as soon as it opens, see what the price is, market buy it if it's going down, if it's moving down in the first 2-3 minutes. Not necessarily market buy it, but you get my point. Just go into this position really fast and try to catch the wave. Literally scalp maybe 10 minutes or so. We'll see though. We'll see. That's just my thought process right now. And then I also have an Nvidia 423 $600 put at $6. My thought process behind this one is Nvidia broke the short-term support, and I think it might fall back down to the 50-day moving average on the day chart. So let's go ahead and look at this really quick. So as you can see, it's been trading around the 50-day. It's never really gotten up so high from the 50-day, except for right here, which it immediately 3 days later it fell back to the 50-day. And now it's out of the dip, and it's trading 3 days away from all-time high. So I think it might be pulling back closer to the 50-day. That's a thought process, but it's broken the short-term support. I mean, clearly we can consider this, although I think that this is the short-term support right here. This one would be secondary. Well, first of all, maybe tertiary, because the 50 moving average would obviously work better. But yeah, that's the basic thought process here. So yeah, as of yesterday, it's fallen, I think. And we'll see. You never know. And then the last one is going to be the Tiger 521, $20 call at $1.40. This is also a cheap one. So let's go ahead and look at this. I don't know if you guys have heard about this company, but it is Up FinTech Holding. I will read you the description on Webull. Link in the description, guys. Webull is nice. Look at this. I can read the descriptions, the websites of the company, who the CEO is, the address, different releases, good reports, press releases, whatever. Corporate actions, none here for this company. Order flow, what the analysts think, although we don't know who these analysts are, so just take it with a grain of salt. But anyways, and then the financials, which is really nice, quarterly, annually, news, you can make notes here, keep it, options, flow, and then the chart. Yep. So it's really nice. So Tiger, Up FinTech Holding Limited is a leading online brokerage firm focusing on global Chinese investors. The company's trading platform enables investors to trade in equities and other financial instruments on multiple exchanges around the world. The company's customers are Chinese investors living in and outside of China. This is really interesting for me because, first of all, it is extremely difficult for Chinese investors to, and this is coming from living from China and knowing a lot of Chinese investors, and also being in the cryptocurrency industry, which a lot of Chinese will use this to get the money out to try to invest in other traditional and non-traditional investments outside of China because it's so restricted. So this company is actually helping the Chinese to do that. Maybe the white hat way, I guess you could say, above water way, by the book way. But anyways, it got smashed yesterday. It's down 14% yesterday. No major news that I can find. But it's an interesting company, in my opinion. And I think it might bounce back. I think it was an overreaction. I think it might bounce back because usually everything is overreaction in the stock market. So even if it, was down $2.85, and even if it can come back up $1, could be interesting, which is pretty choppy if you see here. We can even go down to the hour chart, zoom out a lot. You can see this is some choppy stuff. So right now it is below averages, and yep, think it could be a good one. Honestly, not so much, not such a big catalyst on the Tiger, but of course this is short-term options. What do you expect? We're looking for anything that we can, we're begging for peanuts pretty much, but try to find something that can move the price. Don't need to move the price. Move the price 50 cents. We're happy. If we have an expiration in 2-3 days, the volatility is going to be immense. So this is enough. But anyways, guys, keep in mind, once again, these are not the actual prices I'm entering for. This is the markets are closed right now when I'm writing this, so keep that in mind. And but hey, the good news is the futures are pointing upwards a little bit more than they were. So we'll see if we can have a green day, a red day. It doesn't matter. I've got some puts, I've got some calls in here. The Tiger one is pretty interesting for me, so we'll just have to keep that in mind. But anyways, guys, remember to follow me on Twitter, smash the like button, subscribe to YouTube. We do video commentary of my analyses every single day. And the Webull, don't forget, the Webull is actually really good. They have a really good extended hours. If you're worried about Walmart gapping up to $20 higher, you can actually buy it starting at like 4 a.m. EST, I think. You can start buying stock. So it's really cool. Anyways, guys, I'll see you on the other side. Peace.